Good morning, and welcome to the seventh in a series of energy topic webcasts hosted by the University of Oklahoma's Energy Institute. My name is Matt Jensen, and I am a Presidential Associate Professor of Management Information Systems at the University of Oklahoma and a faculty member in the Executive MBA in Energy program. Today, we'll be visiting with Toby Summers, Managing Director at Ernst Young. By way of background, Toby has 17 years of oil and gas systems and data experience across the entire value chain, with a focus on upstream and midstream. Toby, it's great to have you with us today. Thank you for taking the time to visit with us. I have a lot of questions and I'm curious to hear your thoughts, so let's get right to it.
Hey, Matt, glad to be here. Appreciate you setting this up and look forward to the dialogue.
So the first question, the pandemic has been incredibly disruptive for folks in the energy industry, and organizations have been evaluating their investments in digitization and data analytics. What have you observed about future spending levels and anticipated investment targets in the analytics space post-pandemic?
Going back a bit, obviously we've seen a massive shift in spending, post-pandemic shift. We've seen assets, frankly, because they had to run with less manpower, and in doing so have had to really been forced to leverage digital to run those ops. So we see more and more remote ops programs. We see, the use of sensors and network connectivity. We're seeing asset management programs really shift to, more of an exception-based approach rather than, force the route-based approach that typically would happen. And that was out of necessity. And so in doing so, it's almost a shock to the industry to have to reassess the amount of people and manpower that was devoted and really think about, okay, now how can digital help us operate? And I think the silver lining through this has been that, assets can run for really less OpEx and less investment over time, and really that stretches the margin. So even as prices dipped, the ones that really took a look and used digital to their advantage were able to kind of get by. And actually now that we see prices turn back up are really doing well and really keeping those costs down because digital, frankly, stays low, right? So the investment's already made, network's there, sensors are there. Now it's just a margin stretch. So really encouraging to see that in the industry and hoping to see more of that.
Have you seen any examples where capabilities and analytics really propelled an organization forward during the downturn? Any specifics you'd like to share with us or the lessons from these observations?
Certainly the ones that have done well are the ones that were set up and sort of saw that coming a long time previously. So the ones that were focused on data as an asset, the ones that were focused on leveraging the value from data as a pandemic hit and some of these price crunches, and the ones who were set up already with remote sensing and some remote ops capabilities. Certainly were the ones who were advantaged through the downturn cycle. Specific, certainly, you see the commoditization of some of the sensors. I think the ones that really did well were the ones that had sensors in the field, were able to kind of see the sort of run assets, remotely anyway, therefore weren't as impacted by the inability to get folks out onto an asset and could really run remotely. Again, less risky, less cost. So those have done well. At a macro scale as well, the ones that were able to see sort of the big signals in terms of the effect of COVID on the market, the effect of supply and demand shifts that happen so quickly. Certainly have seen a few companies do well more on the trading side that were able to kind of see that coming and make accommodations for that, right? So those who were able to expand maybe some of their storage contracts before it hit, some that were able to offset some of the excess supply ahead of some of those dips certainly did well through the downturn. So again, interesting to see the industry respond so well. Certainly encouraging from our perspective.
So really those that had the infrastructure, the sensing capabilities in place ahead of time really reaped the benefits.
Yeah, it really was. I mean, I guess the other piece now, it's getting easier to deploy at scale quickly because there's so much technology now available to buy almost as a service. So you think about the cloud providers and the way you're able to get some of these programs up and running now. Again, when I started 17 or 18 years ago, you had to go out and buy infrastructure. You had to go out and buy servers. You had to go out and configure all your environments. Now, again, you lay down a credit card and turn on these services. So it's the time to market and the time to get up and running is drastically different, which again, certainly helped. And I think you've seen quite a bit of increase in cloud consumption through the pandemic as well, due to the fact that you can turn it on quickly. So that's been as well quite encouraging.
So that's on the monitoring and sensing side. Let me ask you another related question. There seems to be increasing interest in automation of operations, of course,
Sure.
but also in machine learning and AI. What have you seen in terms of where these investments and where these capabilities are really paying off, and maybe also where they're not paying off quite as well?
Sure. Where they're doing well, certainly, and again, enhancing the ability for people at the center to do their jobs. So, in the area of image recognition, certainly using even audio signals and processing those against algorithms to, again, detect corrosion, detect sand ingress into a completion, to recognize signals that come through either via sound or via image or other ways. Now you can process those at scale, right? So where a human can only look at one image at a time, can only listen to one signal at a time. We're seeing massive benefit to train models centrally, then deploy those models out to the edge and monitor operations, again, using those algorithms essentially with some of the sensors, right? So both image and sound. And really at scale, then you can run a vast operation with fewer people. And the benefit is then the individuals who are responsible in the central command centers can get alerted to issues before they happen, long before a human could even tell what's going on. Even if you had the typical maintenance routes, it may be a couple days before someone gets out to a well site. So now you're able to get advanced warning, something might be going on, take a look. And so now as you run these central ops centers, you can get a prioritized list of what I need to go look at, and then as appropriate, route individuals out to a site to take a look. So certainly that's an area that's gone well. Not so well, it's all back to the basics of computing. So you still have to have good networks, you still have to have dependable equipment at the edge. So as much of these, we've seen good things happen, again, you also have to accommodate for risks throughout that ecosystem as well. So what happens when the network goes down? What happens if my sensor throws a bad reading? The backstop right now is still humans, right? You still have to send a maintenance technician on a truck out to a site or out to a production topside in the deep water Gulf of Mexico to go take a look or go fix it. So as much as it's getting better, it still puts risk in the system that we have to accommodate for. So we see a lot more investment in fault tolerance and high availability of both those networks and sensing equipment. So it's still a journey, it's still getting there. But for the most part, yeah, quite encouraging.
So mostly on image recognition, pattern recognition, and identification of anomalies. Is that kind of the pattern?
Yeah, absolutely. It's anomaly detection for sure. And again, when you think about sensors, the challenge has been aggregating the data in a way that actually makes sense at scale. And so the configuration of a certain production platform might be quite different from one to the next. And so the models can be quite sophisticated. And so you have to accommodate for mappings and hierarchies and units of measure when you talk about the raw data coming through. So lots of work spent there, but yeah, overall it's all about anomaly detection and sensing issues in the field. And frankly, you see the other side of that, which is not just issues, it's optimization. So how do I optimize the field? And with the enhanced focus on sustainability and emissions, it certainly is now. How do I have a full view of what's going on? How do I look at advantaged barrels that might be a lower carbon intensity for production? How do I run my asset more efficiently, which is ultimately good on both sides, right? It's good for the balance sheet, and it's frankly, it's good for the environment. So we're seeing lots of progress in that space as well.
Now, is the savings mostly coming through labor? Are you seeing a lot on the compliance side too, in terms of savings and payoff from these investments?
Certainly compliance. So it's labor is one aspect certainly, but as well it's an easier process to, again, so compliance reporting is a great example. that flow of information through and to be structured into a compliance report. It's getting easier and easier, right? And less human intervention. And so we're seeing lots of advantages there. We expect a time eventually where regulators are going to come in and, connect via API to data systems, and planning for a time where that's a much easier process, and frankly doesn't take a lot of labor to prepare the reports, and actually it becomes a much more transparent process. There's the cost side of things, but frankly there is the the revenue side as well. And so we see higher uptimes, we can less big issues, again less failures, less downtime, which ultimately means the silent running is what everybody's looking for. So how do I get things running, detect issues before they happen, and ultimately really hit both sides of my balance sheet, both the cost and the revenue side.
Mm. Do you see any shifts in IT project valuation or technology investment priorities as we exit this pandemic?
There is a bit of a slingshot effect. I will say that, recognizing that those who did well through the pandemic were the ones that had well-established digital and data campaigns, who had a good sense of what was going on and could see signals, and detect risks and, opportunities before they happened. It's certainly, when it comes to investments, a much more measured approach. We see really the shift towards much like the way Silicon Valley works, where it's, MVPs, you hear things like fail fast, you hear things like, it's really about small incremental investment, progress measured in smaller increments, which certainly is good in terms of like an innovation platform. So it's the overall approach that I'm going to test quite a few things at once, but I'm going to do that in small, low risk environments. I'm going to do that with a smaller amount of money, prove out, see what works well, and then keep investing in the ones that do work. And so you almost create this culture of innovation where you're trying new things out, investing in the ones that work. The ones that don't go by the wayside maybe go on the back burner, and see if maybe the technology evolves further and allows for further adoption. And so more of an ecosystem approach. It's certainly more measured investment. You can have a real focus on ROI. And so I think ultimately you'll see it's no longer the 5-year, 10-year program that has a big value case at the beginning, and massive amounts of capital are allocated. It's more incremental allocation, incremental progress measured, and then you look at an overall program at scale. Really that slow and methodical push towards value. I think it's incremental progress. Yeah, it's certainly interesting. And capital is king, right? So I think as there's more demand on capital across, all these new opportunities, new reservoirs, as folks go more international, you're competing for capital with, the same guys who are drilling wells. So you've got to show return. And so it's certainly an interesting dynamic.
Yeah, to hear you talk about approximating what companies do in Silicon Valley, that's a pretty remarkable shift. What do you think is driving this shift? You mentioned capital. Are there other things that come into the equation that you see?
Yeah, and overall, I'd say capital. It's human capital as well. It's people. It's at the end of the day, you've got to have good people, and you are competing with the Silicon Valley companies to attract talent. And at the end of the day, you've got to make it exciting and create a vision that people want to be a part of. And so certainly it's human capital. It's cash. It's enterprise valuations as well. So if you just look at the enterprise valuations of some of those Silicon Valley companies who are data-led and information-led, it's no secret, you've got a few that are, going towards $2 trillion. There's no reason that the oil and gas industry can't be the same way as they become more data-led, more information-led in terms of the way they operate.
So along that path, what do you see as some of the really big challenges that technology leaders and energy companies face today?
The same benefits are also challenges. So again, that talent is certainly a really, really high one. Attracting the right talent and keeping focus is a tough one. in this area of innovation and just the pace of change is so high. You've got to strike that balance between a long-term vision that aligns all your investments in both people and capital to making progress towards this big grand vision, and not get distracted at the same time by new whiz-bang cool things that come to market that may or may not be real and may or may not be relevant to that vision. And so, it's a really disciplined process, but the ones who have done it well have really flourished. And I think you'll continue to see, those companies do well, and the ones that get distracted and try to go after the next cool whiz-bang thing too often may not do as well. But ultimately, of course, time will tell.
So what do you see in terms of those companies that get it right? In other words, what are they doing that helps them successfully overcome a lot of these challenges? You mentioned not becoming distracted.
Yeah.
Would you elaborate on that a little bit?
We all read the technical reviews, and there's always a new cool technology coming. This is a virtual Silicon Valley I speak of, right? So I would say pockets of innovation happen all over the world, but we think of Silicon Valley, I really think it's, the world is Silicon Valley at this point, where there's startups popping up all over the place. But not being distracted by what might be, again, marketing, or you've got some IPO. Do I care or not care? Ultimately, that's measured by how does that affect my vision, and does it help me get to where I'm going, or does it not? And the ones who are able to measure a potential new technology in terms of, does it help or hurt my vision, I think are the ones that do well. And so, it goes back to having a vision, aligning your capital to it, understanding what the market's doing. And frankly, you'll even see where, IOCs are investing in some of those tech companies when they do see that they are going to help them reach a vision. But at the same time, you've got to avoid the ones that may not be aligned to your vision.
Let me ask you about another challenge that you mentioned just a second ago. It has to do with knowledge and skills gaps. This represents, a pretty significant challenge I think a lot of energy companies face today. And I'm curious to hear your thoughts a little bit more about that. Where you see the challenges are, how are organizations overcoming these or addressing them, looking out down the path a little bit?
It is a challenge. So overall, experience is, again, we've got a lot of retirees coming. There's the sense of an aging workforce. At the same time, on the other end of the spectrum, as you have this demand for new digital and technology skills, those are certainly at a premium, so hard to find. The ones who are able to strike a balance, and it's about still not forgetting your core business and getting those folks experiences, not just hiring, data scientists, but as well, you still have to hire geologists and engineers. But getting those two sort of areas intermingled, we've seen really do well in terms of a geologist that also knows data science, or a data scientist who also understands, reservoir depletion and production management. You've got to be able to speak on both sides. So ultimately, those two together, we think really are powerful, especially in terms of being able to codify some of that legacy and some of that inherent business knowledge that's stuck in the, in the heads or in a spreadsheet or in some, process flow diagram of someone who might have been in your company for 30 or 40 years. And so we see the ones that do well that are good at breaking down those traditional silos and working together, versus the ones that say, here's engineering and here's geology and over here is IT. Never shall those three intermingle. We're seeing the benefit really come when those traditionally different teams work together again. And that's where you hear terms like digital, but certainly we think about digital in terms of a digitized business. We see those really flourish when those teams break down the silos and work together.
Yeah, becoming digital, right?
Exactly. And so now I'm becoming a digital business supported by all these aspects. And frankly, it's, we see it come together best in these new agile models where you're actually putting these folks in the same team together with a common outcome in mind. So I've got some data engineers, some data scientists paired with a geologist to go solve a problem. Where traditionally that kind of didn't happen. You sort of threw it over the fence, waited for, threw some requirements over the fence and waited for a solution to come back. And you may or may not use it, right? You didn't feel as much a part of that, where now we see those much more tightly integrated and frankly working together for common goals.
It seems like there's going to be a pretty significant crunch when it comes to talent. Lots of organizations competing against one another for top talent. Where do you see these folks coming from to fill these gaps in skills?
Sure. It's a global market. So again, frankly, they're coming from all over the world, as much as they are from, Texas and Oklahoma and, US schools. They're coming from India and Vietnam and China and everywhere else in between. So it's certainly a global talent pool. The way it comes across in terms of execution is interesting. Again, you've got to accommodate for, different time zones and cultures and languages. And it's certainly been an interesting progress, but, at the end of the day, the job will get done. It's a matter of then how do you attract the right talent? And ultimately back to that vision, how do you create a vision that people really do want to be a part of? And you really create it's almost creating your own brand in terms of, attracting that talent and overcoming that crunch. It is competition. And, the pay is only one component of that, right? It's also about, am I fulfilled in what I do? And do I enjoy the work I'm doing? And do I see that common vision? And again, as you see the turn in the industry and, more focus on sustainability, I think that's certainly going to be a help in attracting some of the talent that might not otherwise be interested in the oil and gas industry, as an example.
It'll be interesting to see how this plays out. I'm also really curious to see or to hear about what you see as upcoming trends, and I guess specifically the kinds of signals that you're paying attention to as you identify these trends. Do you see any larger trends in technology capabilities or investments that are poised to take off? And what are you watching in terms of signals? How do you know that they're poised to take off?
We, at the end of the day, we watch just like everyone, right? So we watch adoption as certainly a clear indicator of what's doing well. When I talk about the MVPs and the fail fast scenarios, you certainly watch the ones that are successful. You do also watch the ones that maybe aren't quite ready, but seem to have quite, big promise. So back to the vision, anything that supports that remote operations, pulling people out of harm's way, running the assets more efficiently, certainly is going to be part of that technology stack that ends up, in the next 5, 10, 20 plus years, part of that equation. And so, certainly AI is there. But when you think through AI and machine learning, the challenge that comes up almost immediately is data and data acquisition and data cleanliness and readiness. And so then you end up focusing on some of the foundational elements. And the good thing about investing in data, it's really a no regret cost, because almost any scenario that you paint, data is at the core of it. And so when you think about, a sensor array, data management programs, aligning data, cleaning data, getting yourself in a situation where the ease of access for data is easier. Those are always no regret investments. And the things you do with the data are certainly the exciting part that get most of the attention. So we'll see, data processing in the center. Certainly when you think about cloud, you think about quantum way out there, massive promise, the ability to fully digitize a reservoir to the point where, you see exactly what's going on in real time. Certainly when you think about digital twins and asset modeling, that's going to be a big one and continues to be one where you can run, different scenarios and test different effects of either your own optimizations or external factors on an asset. When we think about digital twin, we also think about modeling a business, right? As you model the effect of different scenarios on a business, so you can kind of run simulations against. We talk about price crunches and supply and demand, unexpected market shifts. Being able to run simulations ahead of time really set you up for success. And so, having your data in place, having the technology and landscape to run those simulations is certainly an interesting one. We'll be watching closely.
What have you seen at the leading edge? Something that's really innovative. It might, sink or explode on us. But what have you seen that you think is really cool? We've talked about avoiding these kinds of things, but I'm always curious to hear people's thoughts about what they think is really compelling.
There's some interesting ones for sure. I mentioned quantum. It's out there a ways. It certainly has some promise in terms of the ability to quickly run those scenarios and model our physical world in a digital environment. And I shouldn't even say digital. It's not digital anymore, but yeah, in a quantum environment. You get into the greenhouse gas emissions. There's some certainly interesting things around sequestration and carbon capture that are getting headlines these days. Hydrogen is certainly going to be part of quite a few portfolios in the future. As far as tech, really seeing the push towards open ecosystems. So the idea that you start to break down the traditional walls between different companies, certainly between partners, between suppliers and buyers, where data kind of flows seamlessly among, and you end up with data services that you can use for your own kind of use cases and to use how you need, but the ability to kind of transact in a different way. And again, I wouldn't call it blockchain as much as just that open flow of information. Traditionally that's siloed, and I have my version, you have your version. Now we're seeing sort of an opening up of those into more of an ecosystem play. Certainly some promising activity around industry consortiums and pushing for industry standards around data and interoperability. I think certainly will be interesting to see. And again, as we all think about how to run these assets and how to operate efficiently and safely, there are quite a few areas identified that are really non-competitive, that are good for the industry as a whole, good for the world as a whole in terms of greenhouse gas emissions. So I think you'll see more of that come. Certainly that ability to interact, interoperable, and then think about the technology landscape as more of a plug and play architecture where I have an innovative product or an innovative component, I can plug it right into either my ecosystem or someone else's. So the supplier ecosystem kind of evolves to that as well. You can see early signs of that from, Schlumberger with Delphi and a few of other tools that are kind of going pay as you go and sort of cloud-based services that kind of enable that as well. So certainly industry taking a turn and promising to see that there's a lot of cooperation and working together towards those common goals.
Yeah, it'll be fascinating to see. Do you have any closing thoughts or anything that you'd like to share that we haven't had a chance to talk about together?
No, I would overall say, when you think about the industry, I think we're, as always, it's been an industry in focus and certainly with pressure from all around. I think it's great to see the industry respond well to a lot of these challenges, both internal and external. And ultimately, I think the strength of the people and the individuals to get through it is what's really promising to see and encouraging as we again have new challenges. I feel like this is an industry well poised to meet those challenges and still succeed into the future. So I'm certainly a fan, and I think we'll do well coming out of this. But again, meeting all those internal and external obligations, both with in terms of shareholders and stakeholders, as well as our bigger ambitions around greenhouse gas and sustainability. Certainly interesting to see.
Toby, I want to thank you for joining us and sharing with our viewers about digitization and analytics in the energy industry. Your insights are a reminder of the increasingly integral role digital technology will play in the energy sector moving forward. So thank you very much.
Glad to be here, Matt. Really enjoyed the dialogue and happy to come by again. But best of luck to you, and hope we talk again soon.
On behalf of the University of Oklahoma, I want to thank our viewers for watching. This is an ongoing webcast series presented by OU's Energy Institute. To learn more about future episodes or to watch previous ones, visit the Institute's website. We hope you'll join us for more discussions as we explore the future of energy.